Welcome to Accelerate OC, the only show focused on the people leading innovation in Orange County. Join our host, Kerry Ransom, in his conversations with the trendsetters, entrepreneurs, investors, and leaders here, because it's time to Accelerate OC.
Good morning. Welcome to Accelerate OC. I'm Kerry Ransom. And thanks always to our engineer, Paul, for making me and my guests sound so good. Today's episode is sponsored by OC4 Venture Studio, which is a new tech startup, company building platform, and community here in Orange County that I have the pleasure of being a part of. If you are looking for help with your startup, or you're looking for opportunities to work with the next generation of high growth companies here, or want to be part of the Orange County startup community, you can find out more at oc4v.com. I am happy to have Hicham Saman on Accelerate OC today. And before we get to hear from him and his entrepreneurial and investment stories, as I'm sure he will have many, let me tell you a little bit about him. He's currently the president of the Orange County chapter of Tech Coast Angels, which is one of the largest affiliated groups of angel investors in the country. And so we'll talk a fair bit about TCA today. We've had a little bit on prior episodes, but we really get to hear from the leader, the grand poobah of currently of Tech Coast Angels here. And they've been busy and have a lot of interesting news to share as well. Prior to that, he was the CEO of a company called Quick Start Intelligence, which was an e-learning company focused on primarily IT-related skills and helping people build and supplement those. He led it through several phases of rapid growth and also was involved in many M&A transactions around it. So we'll talk a little bit about those experiences. He's also been a general manager, senior executive, senior advisor to other CEOs and management teams, also advised private equity in a number of cases, and sits on a number of private company boards. So he's really seen companies, company building, and activity from a number of different levels, which probably serves him very well in his investing and evaluating potential investments. He's really respected in the business community for having really strong vision, ability to create value, and also understand, what and when to buy and when to sell. And he's successfully exited a number of businesses. And so he has worked in a number of industries in the technology space, obviously education, as I talked about his e-learning business, as well as real estate, and has been featured and spoken at a number of industry events over the years. And he's also a local product of our education system. We were just talking off the air how this is a great education system here. He got his MBA from UC Irvine and also, I believe, undergrad from Cal State Long Beach. And he's very active with UCI as well as a number of other local business groups. Hicham, it's great to have you here today.
Great, thanks. Great to be here.
Yes, so let's get to the starting line. As I teased, you're currently the president of Tech Coast Angels, so just orient the audience a little bit to who TCA is and kind of primary activities of the organization.
Sure. So Tech Coast Angels is one of the largest and oldest angel groups. Angel groups are essentially accredited investors. Tech Coast Angels probably comprises of three main groups, I think, that make up our membership. You've got the business people that are retired and are looking to stay engaged in the community and businesses. You've got the senior executives that want to know what's going on, what's hot, what's trending, and what the entrepreneurs are creating and building. And then you've got the successful, whether they're previous entrepreneurs or senior executives that are looking at transitioning and trying to help and support the ecosystem.
Mm-hmm. So you guys have I think as I recall, you have 5 chapters in Southern California.
Correct.
And people from the investment side, they sign up to become a member. And then what's sort of the benefits or the process from a member standpoint?
We have over 400 members across the 5 chapters. Orange County is one of the largest, a little over 100. And Angel investing, there's a lot of details to it, from terms and contracts to networking and finding the right resources to help your investments. And so angel groups try to structure that and provide more streamlined deal flow, more streamlined diligence and documentation. And one of the biggest benefits is just the social aspect, the networking, getting access to the 400 plus members and their skill sets to help yourself, help the companies that you're helping, and overall help you learn and educate yourself and your portfolio companies.
Makes sense. So I am an entrepreneur, and I think that I have a company that would be interesting to angel investors, or particularly Tech Coast Angels. What is my best approach for determining if that's true or not today?
Okay. So I'll tell you first the simple approach. The simple approach is go to techcoastangels.com. There's a application process, and all applications are reviewed and they're all responded to, and you'll get feedback and input. My recommended process is see if your network has some Tech Coast Angel members and start with them, because they might save you some time in how you structure your application, but probably more importantly, share with you some of the nuances of what the membership might be looking for. So you might modify your application pitch or timing to coincide with what might work best for the group.
Yeah, totally makes sense. So you just alluded to, you said what the membership might be looking for. Can you give some general buckets or categories that you think the group tends to gravitate to? And partly I'm saying that because at least in my experience, people often like to invest in what they know or what they understand, at least to some extent already. So
so I'll start with what I personally look for, and then what I kind of see from the general membership. For myself, I'd like to see that another member in the group that has subject matter expertise likes it and believes in it. If it's in a field that I have subject matter expertise, then I've got to believe in the business model, and I'm able to dissect that. So that's one. And then the three key buckets I look for when I'm evaluating a company is, does it have the right team? Is the timing right? So are they, facing headwinds or tailwinds? And are the terms right? So if I like the team, I like the space, and I think they could do well, now have they structured their deal terms to where I can get a good return? That's my investor hat. For the rest of the membership, we see multiple reasons why people invest. Some people invest because they clicked with the business or the entrepreneur, and they want to help them get it off the ground. Other times they'll invest because they have, similar to what I mentioned, they have a group of friends that are in that space that they'll share the opportunity with, and they'll get some good feedback, and they'll invest. Other times, and I'll touch on this a little later, they like what they see, but they don't know enough about it to invest, and that's where something like our chapter fund that we're now launching helps them diversify and invest. But it's kind of all over the place. You would think that they mainly invest in areas that they know well, and I don't find that that's necessarily the case.
Sure.
They tend to invest in companies that they feel comfortable with. Now, that might be in industries they know, or it might be in industries that a good friend of theirs knows.
Sure.
But at the end of the day, they need to get comfortable, because it's hard to know enough about any business within the short period of time that we're talking to them and diligencing them.
Well, and it seems like that's a big reason why a lot of the proverbial advice in angel investing is to have a broad portfolio because of exactly what you said. It's hard to know enough about any one, and so having a more methodical but broad process. A mutual friend of ours who has in the dozens and dozens of investments, it's proved to provide a pretty good return, and yet you still end up having a lot of ones that don't work out. And for me, it's been tough going too far outside of the quote unquote areas that I know. I mean, if you think about this area in particular, there's a lot of really compelling medical device, biotech, biopharma startups, and I look at those on the surface and go, this is awesome.
They look great.
This needs to exist in the world, and I don't know.
Yep.
I barely know anything about the
Why wouldn't this
regulatory.
take off? It solves the problem.
Exactly. I mean, quality of life improvement or whatever. And it just, that I know myself enough to go, this terrifies me. And so I need to find either that friend that I can just draft behind but I think that sort of speaks to some extent to the challenge that I feel like we have a little bit here in Orange County and that we were talking about off the air. So let's go a little deeper. If everyone has that same reaction that I just did of like, well, I made my living. I grew up in retail. That's an old world business in many respects. And, if I made my living in something that's been largely the same for a long, long time, how do we make it easier for other people to embrace investing into the innovation economy that we so desperately need more people here participating in?
Well, that's precisely why I think groups like Tech Coast Angels are so valuable for a lot of investors. So we have maybe about a quarter of our membership are from the medical space. So when we see a company that sounds great, we usually turn to those individuals and ask what they think. And if they don't happen to be at that meeting, we'll reach out to them and say, we saw this company, we like what they had to offer. It sounds great. What do you think? And it's amazing the insight they'll have, from the complexity of the regulation process to other competing solutions that might not even be visible when you're looking at the competitive landscape. That's where a lot of the value comes for the individual member, is to be able to look across the room at individuals that much closer expertise in that field to help guide kind of the thought process. And going back to something I mentioned earlier, that's advice I would definitely recommend entrepreneurs take, is try to build evangelists and champions, specifically within Tech Coast Angels, if you're looking to come through Tech Coast Angels, that might be viewed as a expert in that field. If
you don't want me touting your next cardiovascular stent, I can tell you very confidently of
well, that. but if you had our cardiovascular surgeon,
that's
right, that has spent some time with you, so they can speak to your character, they can speak to the progress and your ability to execute, and they help bring you to the group, huge amount of momentum that brings.
Sure. Yeah, that totally makes sense. So will you guys, if let's say you meet somebody, we'll stay on the medical example just for reference here. If you meet them and you go, I kind of like this person, they seem to have some of the early indicators of potentially the passion, commitment to go through this, will you try to get them introduced to somebody who could be that champion so that they have a better chance maybe to go through?
Absolutely. And I think it goes two ways. So at the event that we were both at recently, I was on the panel, and one of the suggestions I made to the entrepreneurs in the room is treat your engagements, your connections with your potential investors, almost like a dating, or you're looking for your spouse. Make sure that it matters.
Yes.
And a lot of times I see entrepreneurs almost disregard your background, your expertise, or even your style, and continually, push for their company's pitch and their investment request. And to me, that doesn't make sense. What you want is investors that understand the business, understand you, believe in it. And so I absolutely would connect them with the right person. If I felt they had those right characteristics and they had something, if I had people within my network, some of my best friends are doctors or engineers, I might stay involved myself if I've got the resources to help. If I don't, I'll usually share that with them and try to connect them with the right resource. But that's a big piece of advice that I hope the entrepreneurs listening take, and that is don't keep trying to pitch and sell to someone that is telling you they don't have a lot of value to add.
That's right.
Take the advice and find the person that can, because that'll resonate a lot more when that person speaks to like-minded investors.
I could not agree more. I mean, the other reality, and you know this for sure, Hicham, is when I meet an entrepreneur and they have investors who maybe, or they're talking to investors who maybe don't have deep expertise, it might completely undermine how I look at it, because to me, that doesn't necessarily validate that they're on the right track. And I think that it can be a disservice. So that's one of the reasons why I tend to focus on things that I have experience in, is that one of my other, you were talking about your filter system. I mean, one of the ones that I use pretty heavily as I get through, do I really like the founder or team, and do I think this is the right market, is, do I have some ability to add value or create unfair value or advantage, which usually means I have to have something, some sort of relevance or related experience in it. And it's so hard to compete out there that I feel like I need to put my resources against things that I feel like I can help affect outcomes on. And I don't think all angel investors, and I don't think we probably want them all orienting that way, but I know when I get involved in a company, for example, I'm involved in several fintech companies, but I've done 2 very large startups in that space, and I know a lot of people, and I can be helpful, and I know that by getting involved or being an advisor, that may actually help them.
I think you bring up a really important point that I didn't touch on, and that is most angel investors, they chose angel investing for a reason. They could have just invested in a fund, in a passive fund. They could have just invested in the stock market. They could have had financial advisors manage their money. And a lot of them have those things, but they've set aside funds for them to be actively engaged. And most of them are a lot like you, if not exactly like you, meaning the value they get out of angel investing is their ability to contribute additional value beyond their money. If you just need funding, I would say that doesn't necessarily, get the check boxes for most of the angel investors. They want to see that as angel investors, we can give you money and we can give you support and connections and resources and expertise, and that you're the type of entrepreneur that wants that. If they see that you're not coachable and you're not looking for that added value, it's probably not that appealing.
I think that's a great point. And yeah, I think unfortunately for a lot of people here as entrepreneurs, they maybe don't have great options if they're just looking for money. And one of the things I say a lot is, if all you're looking for is money and you think you've got it all figured out, that's sort of my first filter of you're probably not the right entrepreneur for me to work with, because in my experience, it takes a lot more than capital to build great companies.
Well, beyond that, I think a lot of times it doesn't take capital, or doesn't take as much capital to accomplish a lot of the things that a company needs or an investor wants to see. And that's sometimes an area that I spend a lot of time working with entrepreneurs, asking them why the raise, why this amount, do you really need it? Do you really want it? Do you want all the consequences that come with it. I think a lot of times it's a status. If you don't raise funds and successfully raise funds, then you're not a real startup or not a real, kind of growth company. And I think that needs to be questioned a lot of times.
For sure. I mean, it's a really expensive money, and so I totally agree with that. I think unfortunately our financial system has abandoned the early small business funding. Although I'm seeing in my office as an example, we're seeing a lot of companies go through the Small Business Innovation Research grant process, which is another alternative and non-dilutive way to raise capital. So there are creative ways, or customers, obviously, and revenue being the ideal one when you can make that happen. But I do feel like we do have some gaps in our financial system, and we even see it. I mean, the venture story. I had a guest on last week who is up in the Bay Area and was talking. The venture dollars are in the hands of fewer and fewer firms, and you're seeing fewer companies get funded, but getting more capital. And it just feels like maybe the idea that fewer companies should get this capital, yet it's probably easier in many respects to start companies than it's ever been. There's a contradiction in there, or there's a conflict in there that we're probably not talking enough about.
Yeah, and I definitely think there's gaps, but from my perspective, the biggest gap is the organization and structure. So if you break it down by segment, there's usually enough or plenty of pieces of the ecosystem: incubators, accelerators, VC firms that are coming down in size, angel groups, angel investors on their own, government funds and grants. But I think specifically in Orange County, we could do a much better job of structuring and organizing the ecosystem to make it more appealing and less risky for a lot of these different organizations to participate, which ultimately would get more members involved, more activity, and prop up the entire economy.
Yeah, I totally agree. And you skipped right to one of the key questions, which is, what are the things that we can do better here? And we were talking off the air. I've said in several even prior shows that I've said for a long time, I think there's a big latent entrepreneur population here. And so when you talk about people perceiving things as risky, it's on many sides, right? Risky potentially as an investor. I may have capital to contribute or invest into the community, but I don't necessarily see all the support resources that will help de-risk or amplify my investment and ensure this company succeeds. As an entrepreneur, I may not start because I don't see enough other starts getting attention, getting notoriety, or stories of success that I can point to and say, oh, I can be like that, right? So I always, part of the reason why Accelerate OC exists is to try to highlight some of those great successes. So there's I couldn't agree more. I think we're seeing better collaboration amongst groups
I was just going to say,
than we probably ever have, but
we
still have a lot of work to do. Yes.
We're in the process.
That's right.
Your show, other ecosystem communities and newsletters, events. We just both attended, different groups, VCs, family funds, angel groups, collaborating more together, universities creating programs in schools to help drive it. So I think Orange County's on the cusp of really building that structure and that organization that we so desperately need. And I take a lot of pride in being a part of that and trying to help drive that, because I think if we're successful, Orange County will not only be a great place to live and raise a family, but it'll also be a great place to build a business and to hire talent and to grow.
That's right. Yeah, I think one of the things I say often here, my mission is really for my kids. And I want them to choose to come back here and build their life because they see a dynamic economy that is oriented toward the future and not stuck in a past or stuck in the doldrums. And we've seen this play out in other markets around the country. And in some cases, they've had to have a severe dip to get there. And I think the positive that I have a lot of hope for is that people here, we're in a good place here in Orange County. I mean, probably the best place in the world to live, but even from an economy, we're in a good place. If we can act now before things get bad, we may be able to just make it through to the other side. And there's a strong entrepreneurial spirit that runs through this county for the history of it. And so somehow tapping into that and re-energizing it is probably key to this whole thing too.
Absolutely agree. I think with a lot of things that have been kicked off in the last 5 to 10 years only, I think the next 5 to 10 years, I believe, are going to start to show a lot more of that structure and organization that I'm referring to, which over the following 5 to 10 years is really going to show, I think, a change in the ecosystem in Orange County. And I'm excited to be a part of it, and I'm excited to see what that brings.
That's awesome. So let's talk a little bit about Tech Coast Angels in particular. I love stories. So give me a good success story of a company that Tech Coast Angels got involved with and had a great outcome.
Sure. So last year was actually a fairly banner year for us. We had over 6 exits with teens and up multiples.
That's awesome.
And all in that
So explain
year.
just for the audience what that would mean from, let's say it was a teen multiple.
Yeah, sure. So if as an investor you invested $1,000 in a company, teens would mean you got 13 plus returns.
That's
A lot of those were 20 plus.
That's amazing.
Returns. So
Which on an annualized return basis is significant for those of you who are listening at home.
Absolutely. And one of the ones where I kind of like the cleanness of this story, parcel pending.
Yes. And Lori's been a guest on here.
Yeah,
So,
and
yeah,
Laura's great.
She's great.
I kicked myself because Lori presented to the group, I think within the first couple of months that I joined Tech Coast Angels. And I looked at the presentation. Gosh, I really like Lori. I like the business, but I don't know what I'm doing yet.
Sure.
So I missed
getting your
missed
bearings.
that opportunity. But but what I like about that story is she was able to generate interest and excitement from a couple of key members that really dove into the business, were able to champion it, raised enough funds where they didn't need to raise subsequent funds, really tapped into the network and the resources of the angel members from Tech Coast Angels that were on the board. And I believe they were very instrumental in helping the company kind of accelerate the growth. And without raising any subsequent rounds, they were able to, within 4 years, have a nice substantial exit. And what makes it even better is that the company's still operating in essentially its same form and growing in Orange County as part of a larger organization internationally. So that one's kind of a real neat story. It's more recent and it's a shorter window. You don't always see that.
Yes. Well, I think the highlight, just to draw a little more attention there, is the fact that she raised that round of capital, and it was significant but not astronomical, and then put a great business plan in place that was capital efficient enough that she didn't have to go raise more, which leads to dilution or distraction or who knows what.
She didn't make it just about raising the
That's right.
subsequent rounds
That's right.
and a lot of times it feels like that's the symbol. Get to the Series A and
That's
Series B.
Well, I always hesitate, when friends or others that I know raise significant rounds of capital, I always pause. I often want to give them a attaboy, congratulations, but in some respects, I know the other side of it is the burden now, or the pressure now, or
The constant
the
fundraising,
cost,
the amount of people you've now got to report to.
That's right.
Another quick story. We had one of our most senior members on an airplane flight sitting next to somebody who had a company in, I think it was Oklahoma, was able to really interest them. And they weren't pitching and they weren't fundraising, but were able to interest them to the point where they suggested, and we typically try to invest in Orange County in Southern California, but they were able to interest them enough to suggest they present to the group. We ended up making an investment, and within 18 months, 24 months, the company exited. And it was a really small raise at a small valuation in a part of the country that we would have never thought. But, you know, if you make the most out of your encounters and you excite and interest the right people, I think both the entrepreneur and the investor and the ecosystem can benefit tremendously.
Absolutely. So let's flip it a little bit to a more of a cautionary tale. Let's talk about one that sort of came through with a tremendous amount of promise and didn't work out as expected. And ideally, even there, what the group or what folks learned from that. Yeah.
So there's numerous examples of those.
The nature of this. Yes.
Most people don't know, or maybe they do. The majority of angel investments return zero. And so we've got more of those, unfortunately, than the ones that do. But one example was and I was personally an investor in this, a company that created a vitamin C gum. It ended up being a gum that was tasty enough where my kids would ask for it. And from my perspective, it made a lot of sense. If you're going to chew gum, why not
get some vitamins?
Yeah. Why not chew some gum that give you some benefits? What I didn't know, and what we didn't do enough diligence on, is the process of taking it to market. And the operators of the business, the leadership of the business, were passionate, were smart, were medical oriented, but not retail consumer products experts. And what we found is it's very easy to burn through a lot of cash in the consumer product space and not end up with much of a growing profitable business. And so while we got into hundreds of CVS and Rite Aid stores, the more we got into, the more cash it required. And it was educational in the fact that you have to pay for shelf space, you have to pay for the inventory. So that's one example. Another example that
does that because this is the other, I guess, what's the takeaway, right? Because the beauty of having this big group is that you have a lot of perspectives, a lot of backgrounds and expertise, as you mentioned earlier. Does the group do retrospective sort of looking at these and then try to draw conclusions such as we shouldn't touch consumer products, which I hope isn't the actual conclusion, but it's here's what we would do differently next time or
so
something.
We see that at pretty much every screening. When a company presents, some of the more senior members will share war stories of similar type companies. And in that example, we simply ran out of cash.
Sure.
And it required so many subsequent rounds, that people just got drained.
Sure.
They said, we don't see the end.
Which is sometimes the risk of an angel heavy investment group is that, and that's well documented out there that if you are going to need subsequent capital, sometimes you can't tap the early angels for that.
Especially repeatedly.
Yes.
Without showing some tremendous progress. Right. So that was one example. Another example that we see are partnerships that aren't structured in a way where it's equitable or perceived to be equitable by the key men and women in the organization. So these are all kind of lessons you learn and you try to incorporate in the next diligence process. But we had one company where it's a great product, great solution. Fortunately, we were able to help them navigate it, but essentially soon after closing, those strains started to show that the person who felt maybe they were contributing the most value didn't have the structure for them where they felt they were being rewarded properly. And so you want to dive into the team, especially the key personnel, and make sure that they're excited and happy about the opportunity, the transaction, the structure, and the vision.
Yes.
But I can go on and on about lessons learned. I think specifically for an entrepreneur, one of the key lessons that we're seeing right now that is making fundraising a little bit more challenging is because they're seeing so much maybe interest and excitement in the market in general, or maybe from stories and raises. We tend to see a lot of entrepreneurs come in with what could be a great company, a great product, but their expectations are so high on the terms.
Priced for perfection, as I say sometimes.
Yeah. So going back to what I mentioned at the start of the show, strong team, strong timing, but the terms just aren't attractive. And then we find that they end up spending a lot of time fundraising.
To find somebody who will support those terms.
Correct. And my recommendation there is, if you find the right type of organization or person, you might want to adjust your expectations and focus more on what you need to execute the business as opposed to getting the least amount of dilution possible.
Yes.
You focus too much on that and get the valuation too high, you end up spending most of your time on the wrong things.
I could not agree more. So let's talk about that a little more. In that, how do you think about we as investors helping educate? There is this I call it return on effort element, in that you have limited time, and there are perceptions out there that if I have to educate an angel or angel group about what I'm doing, that's going to take all this time, and then I my return on effort is low. How are you guys? And I have some of my own thoughts, but how are you guys trying to attack that? Of, hey, if we can get to reasonable terms, we'll act really fast to try to get you back reoriented on the things that are going to create the value, because raising money on its own doesn't create value for the business.
Correct.
So how do you think about that?
Well, first off, you should come in within a reasonable range. Otherwise, it
Right.
turns off the investor or the group to where it's not even of interest. It's think of it like house shopping. If you go see a house that you love and you see the price point at double your budget, you don't bother trying to negotiate because it's just out of reach. But if it's 10, 20, 30% over, you might still look at it and dive in a little deeper and then try to negotiate. So first, try to be reasonable. And what we're trying to do is educate entrepreneurs and educate other angels about how these valuations impact returns, but also probably more importantly for the entrepreneur, how it impacts future raises.
Or at least optionality, right? Because I talk a lot with entrepreneurs about that. That how do you grow into this value, and is there enough capital and time to do so? Which that's not you don't ever want to have to go do a down round.
Correct.
Like all those things impact you down the line. Yeah.
And that's what we're seeing in a lot of the deals that we're seeing now, are companies that raised at a high valuation just 6 months ago. Ones we may have passed on, and they've come back to us and have made progress in the business and are wanting to raise at even a higher valuation because they have to. They feel like...
They think they have to.
They think they have to, correct. And it's a bitter pill to swallow to come back. And we'll tell them the same thing we told them the first time around. We love the business. We love the opportunity. But we've got to make it more realistic for us to be interested. And that's a hard thing for them to hear, and for them to go back to their investors that they did convince to invest at the higher valuation. And a lot of them don't understand that if it's not priced right, it oftentimes creates more headache and potentially company ending headaches down the line when everyone's kind of reluctant to touch the opportunity because it's got some corners of it that are going to be ruffled if you try to approach it.
Sure. Well, thank you. So, Hicham, a couple more minutes. I'm getting the time sign here from Paul, so I'll resist it a little because I definitely have a lot more I'd love to talk to you about, and we may have to continue this in a future episode. So I had mentioned a little bit off the air. There's a group here called CEO Leadership Alliance of Orange County that's come together, and it is really represented now by some of the biggest companies here, and they're trying to be part of the solution to how do we start to create more high wage, high paying innovation jobs. And I think you and I know that a lot of the jobs are going to come from these newer companies that we're trying to support getting off the ground. How do you think we can do a better job including the corporations in this early capital, early support of startups, which may not always be capital? And you mentioned some senior executives that are part of Tech Coast Angels. How do we maybe get them and get their companies involved and not just themselves as individuals? So just a couple thoughts there, but
Sure.
I would love your thoughts on that topic.
First of all, I love that purpose of that group and what you're doing and what your involvement there. I think that's one of the pieces that are missing. I think having the large corporations and enterprises that are in Orange County more actively involved in the startup ecosystem, I think creates a tremendous amount of value for them. It also creates the perception of reduced risk for the investor.
Yes.
And reduced risk for the entrepreneur, which I think is key and critical. When you're in a field and industry that might be tangential or complementary to a large enterprise in the area, and they've expressed interest or have been involved and have shared some of the input and feedback on what they like and what they don't like about the business, that starts to paint a clearer picture for the entrepreneur what they need to do. It also starts to paint a clearer picture for the investor on where the opportunities are, and it's that kind of industry expertise that helps provide the validity and reduces the risk. So I'd like to see a lot more involvement, and I've been working with a few companies and their venture arms, and I see just positives from getting more engagement there.
Yes, totally agree. That's great. Well, final lap here, Hicham. One of the things I always ask my guests is to leave sort of a lesson learned or a piece of advice with my listeners from their journey. And so as you think about, you're touching a lot of early entrepreneurs here on a day-to-day basis. What advice would you have for those that you haven't met or that are thinking about starting a company or are in the throes of it here in Orange County?
The biggest advice I could give, and I repeat this to just about anybody that I talk to that asks me for advice on the whole, kind of building a company, fundraising, just kind of any aspect, is enjoy and love the process. And to enjoy and love the process, surround yourself with people that you enjoy being around and that see the vision and that you really, click with and can see yourself spending more time, whether it's an investor, whether it's teammates and founders that you bring on board. Life is too short, especially in a startup. You spend more time typically working in your startup than you spend at home or anywhere else.
That's right.
And so make sure you're doing it in a way that is enjoyable, that you're building the people around you that you enjoy being with, they enjoy being with you. And it makes the whole process much more enjoyable and much more rewarding and ultimately much more successful.
That's great advice. And I think not enough time and attention is spent talking about that because, we get, I think at times we get desperate, we get urgent and sort of look for anyone with a pulse who can validate or feel like they might be additive in some way. So Hicham, thank you so much for joining me today on Accelerate OC and sharing great wisdom, some great stories, and for being such a key contributor here. As you said, angel investors do this for a reason. They have a purpose. They They want to. I mean, it's called Angel for a reason. It is well intended. It is meant to try to be helpful to entrepreneurs and to new businesses. So thank you for validating and reminding us that is really the role that you and your group play, and for helping to accelerate the Orange County startup community, because this is something that we know we need to continue to grow in the coming years.
Absolutely. And thank you for doing what you do. Appreciate it.
You've just listened to Accelerate OC. Join our live recordings every Tuesday morning at accelerateoc.com, or listen, like, and share anytime from your favorite podcast spot. Let's accelerate OC together.